So we've got the latest jobs report out of the U.S., a pretty solid report. We saw the unemployment rate ticking back down to 4.3% despite the participation rate increasing. That means the household survey needed to be fairly strong to compensate for that increase in the participation rate. Of course, the headline non-farm payrolls change out better than expected, above 200K, a tiny net positive revision to the previous 2 months' data. And then the average hourly earnings beating the 2.4% expectations, but with a 2.5% reading. But let's recall that we've seen quite a big slide prior to this to that 2.5% level. So it's only a marginal positive there. And that was really the key for exciting, I think, a more positive outlook on the dollar, that average hourly earnings number. So all in all, I don't think there's a lot of anticipation heading into this report. It's got a marginal impact on the dollar. Did tick a little bit higher, especially against dollar yen, which tends to be the most sensitive to movements in U.S. interest rates. But the euro dollar going down and then almost immediately erasing a lot of that sell-off. So I think net, there's very little change to the outlook here for the dollar. Perhaps if bonds continue to sell off, dollar yen could mount a bit of a rally. But if this euro dollar rally continues stronger, I think you're more likely to see a euro yen rally continuing apace and being more interesting than dollar yen from here. So I think marginal impact from this for the U.S. dollar, where economic data is a bit of a sideshow to the political goings-on in Washington and Trump under pressure there. So I think really this being Friday, we're going into a weekend, and let's see how things develop next week. But I think minimal impact from this jobs report on the U.S. dollar and to recent trading themes.